Hey y'all, welcome to Sparkle and Trade, where we spread joy and support in the trading world. If you're new here, welcome. We are glad to have you. We are excited about helping you grow your accounts or taking you along on this journey. The information that I share is not advice. I'm not a financial advisor, but I do like to help. I like to help this small person. I like to help people that are just starting out. I like to give you guys encouragement and honestly just share my journey. That's really just is all about in the stock market. Trading in the stock market on any level is a highly emotional experience. And as somebody that is a counselor in training and frequently speaks to people about their mental emotional state, I realized that one of the greatest things that we need is people in this space encouraging each other, helping us to trade smart and not emotional. Now, this past week was a little bit of a what I want to call it. Excuse me. It was a little bit of a I had triggering moments. I remember being like slightly triggered because, as you guys know, the whole situation happening in Ukraine right now is affecting the entire world. And the last time that I was this glued to the news about people being hurt at war or being I just being hurt, period, was back in August of 2021 when the Taliban was invading Afghanistan, or they were taking over Afghanistan. And I remember that week. I tell you guys all about it in my, if you haven't watched the video, I posted it. It's my worst trading day. I'll never forget that week. That was the week that I was extremely emotional about what was happening in Afghanistan, like I am about what's happening in Ukraine. I wasn't fully aware of how much my emotional state was affecting my everyday trading decisions. I was not connecting the two like I should have been. For some reason, I was just making decisions on that particular day that was not connected to how Terry trained us. And if you haven't learned how to trade in the stock market, like if you're new to my channel and you have not trained in the stock market, there's a link below that teaches you exactly how I learned how to trade, what I do, and how to do it. So, this whole channel won't make any sense to you until you learn how to trade. So check out that link. But on this particular day back in August, I went off on my own thing. And I remember thinking to myself, the stock market is not going to go up while all these people are hurting. All these people are hurting. The stock market will not go up. And so I made a place to trade that, I want to say, what day was it? That Monday. And in my head, the trade did the opposite of what I thought, because I'm thinking it was actually a pretty great day. These people were hanging off these planes and dropping from planes. It was just horrific watching it on the news. And I remember thinking to myself, the stock market's not going to go up. Well, the stock market had a great day. And I placed a trade in the opposite direction, say it's going to go down. And I remember hanging on to that trade instead of like getting out. I held on to that trade and I had a max loss option trade. It was a max loss that day. And I lost a lot of money. So when this Ukraine situation happened, I felt it all over again. I said, there's no way that we could do well. And guys, there were, since that all started happening on Friday, I want to say 2 or 3 great trading days, and the stock market going up today. So it went down, I think, on Friday, and then came back up. Like, again, it did this crazy swing that I hate when it does it. But this comes to show you again, the stock market is a business. It is not conducive to your emotions. So let's see here, I'm looking at it. On Thursday, the 24th, the stock market went down. Now, Thursday was last Thursday, so it was the speculation that Russia was gonna invade Ukraine. And then they actually did it. It went down, but ended in the green. And on that Friday, the stock market had one of its best days that week, that Friday that they actually went in. And then on Monday, it was in the green, ended in the green. It went down Tuesday, but ended in the green. It's in the green right now. It's going up right now. So it does irritate me. I'm not gonna lie, because I feel like some things are beyond money. But I know that business is not conducive to emotion. But we are people, right? We have feelings and emotions and a conscience. And I think a lot of us have a hard time connecting. How could we make money in such a horrible time? People are literally dying in horrific deaths over there in Ukraine. It's really hard to reconcile the two. So I wanted to bring that up because I've been doing some research. I talked to you guys last week about trading in a volatile market. So I think this is going to be part 2, because I've been doing some research on trading in a volatile market and how to become smarter at trading. If you do your technical analysis and everything that Cherry taught you, you are on the right track. That's what you need to know. There's only one piece that I would say, like, to be cautious about. I recently learned about, like I talked about in my last video, AI, artificial intelligence, or computers and technology that tracks the traders, what they do. And what I learned is that there's something called stop hunting. What stop hunting is, it's a computer technology or AI that when somebody puts in a trade and then puts in the stop, basically says, this is going to get you out of the trade. There's technology out there right now that will search for people's stop order. And when it searches for your stop order, and it goes on like what they call a stop hunt. So while you might have, your zones in place, these stop hunting will go beyond those zones for a moment just to knock all these people out of the trade. And so you're like constantly losing because you're like, man, it keeps on hitting my stop. Why does it keep on hitting my stop? Because the AI, the computer technology, which I have confirmed and realized that this is actually happening. I learned it. I even asked other people to confirm my suspicions, and they have confirmed it. And let me tell y'all, there is something out there called stop hunters. AI technology from the ETFs, the big banks, the people that are managing millions and billions of dollars, even people that are managing what they call individual investors, which I believe they ain't all on your side, but some of them are giving information to the banks to say this is where everybody's stop is. Like, what's stopping them from doing that? And I didn't even know this technology existed, but I had a suspicion when I noticed everybody was having the same experience. I'm like, wait, y'all not doing the same trade, but y'all having the same experience. So something's happening here behind the scenes. So here is how you get around it. Smarter. You got to be smart. This is going to require a little bit more, what am I call it? Emotional control. So if you're somebody that is highly emotional, you have high anxiety and high stress when you enter a trade, this is not for you. This is not for you. Everybody always talks about every trade you get, make sure you put a stop in. I no longer do that. Because I learned about stop hunting, I now realize that when I put in my stop, they know where I'm at. And if enough people have a stop around a certain area and they see that stop and it's their stop hunting, they can knock all these people out and get your money. That's the whole point, is to make money. They're stop hunting. So I realized that I'm no longer going to put a stop in physically. I'm going to start putting a stop in knowing when I'm going to get out. I'm going to put a stop in like, I'm going to know just the amount. Okay, when my account gets here, or when the price gets here, that's only good for people that can watch your trade. If you can't watch your trade, and this season, I wouldn't even get into a trade because we're such an volatile market. If you can walk away from your trade, for a few hours, I wouldn't get into the trade. I would just be like, I can't trade today. Trade when you can sit there and watch your trade throughout the day. Because the market is so crazy. I mean, you also don't have to trade, or you can trade in your sim. I got into a trade on Tuesday because I was trying to figure out, like, what is this war going to do to the stock market? I didn't want to be in any trades with real money. So the trade that I got into on Tuesday was you guys know I do vertical credit spreads, but I traded in my Thinkorswim account on my sim just to see how this crazy, all of this is treating the let's see here. Yeah, how all of this is treating the markets, and what the market is going to do, and how is it going to work, and what's going to happen. So I got into I bought 65 contracts for SPY with the expiration date of today. I actually got into trade on Tuesday, so I knew I was doing like an overnight type of thing, which I normally don't do. I like the 0DT, but because it was my sim account, I didn't mind doing that. It went well the first day. Right now, it's not in the red, but I think it'll end out because it's a vertical credit spread again. It's about not going above a certain amount, but my mark, or my strike price, is 443, 444. That's my vertical credit spread, 443, 444. So as long as it stays below 443, which we're actually quite close now, I should be good. That's what I got in yesterday for. I'll make, let's see. Trying to show you guys. As long as everything goes as planned, I'll make a little bit over $1,000, like 1,200, like a little bit over $1,000 essentially, for this trade. And that's the reason why I like these things. I love how vertical credit spreads work. So I got into the trade just to see how the market's going to do. But I had to log on here to tell you guys, like, it is real. People are hunting for the individual investor. And I just don't think enough people talk about that on YouTube or anywhere. Not enough people are talking about the people like your money, the money you put into the stock market and then lose, is making somebody else's money. When you make money, somebody else lost money. The only way you are making or losing money in the stock market is you have to have two people involved, or two entities, or two organizations, or whatever involved in the transaction. So one person agrees to buy, another person agrees to sell. Who's going to end up with the money? That's how this whole thing works. So you have to think smart. You have to go into placing the trade smart. Either A, don't place a trade because you realize I'm highly stressed out today. I have high anxiety, or the news is really bothering me. I'm not sure how things are going to go, or the volatility of the market is too high. I'm not sure how things are going to go, or you just don't feel good trading. You just don't feel like it's a good day. Sit out, don't trade. Like, it's okay. Y'all took like 2-3 weeks off, and I went to do all my other stuff. That's why you can't have all your eggs in one basket. Like, do other stuff. But I was doing some research on this particular topic of artificial intelligence technology and day traders, or stock market people that get into the stock market. They hunt for you, and so you have to trade smart. So here's the other thing. So number one, if you have the capacity, again, this is not good for people with high anxiety. It's not good for people that is highly emotional. And even you got to get to the bottom of, like, what's causing your stress and anxiety. Like I heard about a lady and she was just talking about like, she felt like when she became, she felt like when she, um, you know, didn't do well in the stock market, she felt like high stress in it, or she felt really, really bad. Or even if, getting into a trade, she felt lots of anxiety. It came down to, as a child, she was always, really highly interested in being perfect or doing everything right. Everything had to be done right and perfect. And her perfectionism was really affecting her ability to trade because she was afraid to get into the wrong trade. And every trade is not going to go the way you think it should go. That's just the truth. And so because of that, it was keeping her from even placing the trade. And then when she got into the trade, she felt high stress and high anxiety. And then she ended up getting out too soon, or she didn't see it through, or whatever. Um, yeah, you gotta trade smart, and you have to be in a good mental place. It's like getting on a roller coaster, but you can't get on the roller coaster if you're not feeling good. You ain't get on a roller coaster if you're sick. You ain't gonna get on a roller coaster if you're about to throw up. Like, you're not physically gonna get on the roller coaster. You can't handle the ups and downs. That's a similar thing of trading. You're getting on a mental and emotional roller coaster. But if you can't handle it, don't get on for that day. Prepare yourself mentally and emotionally by knowing and being prepared. The way that you prepare yourself is you learn how to trade. Number one, the things that are working for you, and the things that are working against you. I don't think people are talking about enough about the factors that are working against the day trader. Everybody's talking about all these indicators, which I don't even think you need all those indicators to day trade. Now that I've been doing this going on, I don't know what, 8 months, almost 9 months now, had some massive losses and some massive wins. I don't think you even need all those indicators. You just need a simple strategy, which Cherry teaches, and you need to know what's working against you. And what's working against you is you. You can work against you by your own emotional overthinking mentality and the AI technology that's coming to hunt for the individual investor, the big bank. So number one, I told you guys in the last video, you can try out different platforms. And I say, don't put all your money in one platform. I know that's difficult because, like, how do you keep track of it all? And I was just doing this the other day and I was like, this is complicated. So if you're not going to put all your money in one place, then the other option, like I have most of my funds in Thinkorswim, but I just opened a Webull account and I have Robinhood account. I've been hearing some things about Robinhood, so I'm kind of a little side-eyeing them a little bit, but Webull has seemed like I haven't heard anything about Webull, and I know a lot of people that I look up to use Webull, so I'm going to see how Webull works. But Thinkorswim has been very, it has been my favorite platform to trade on. I trust Thinkorswim the most at this point. So excuse me. But I do want to see how the other ones do. So the way that you kind of manage having multiple accounts is you can trade. Don't put a trade here and a trade here on the same day. Like, trade here. Let me see. Let's say you do Thinkorswim today and you get into a 0 DTE vertical credit spread options trade like I did on Tuesday. Or that was actually a 1 DTE vertical credit spread because it expired today. So you can do a 0 DTE vertical credit spread options contract trade, or in Thinkorswim, and then do another one. Like if you trade Monday, Wednesday, Friday, like most people do one Webull on Wednesday and one Thinkorswim on Friday, or Thinkorswim on Monday and Friday and Webull on Wednesday. So you can kind of see how the different platforms treat you and how your money is responding to them. And I really like Webull because they give you a lot of information. Like they give you like the probability or what everybody thinks about this trade. There's analysis on Webull that says this trade is going to go up. like they tell you right away. And then there's also people down in the comments that will either agree or disagree with the analysis on the platform, which I'm like, that's dope. Like TradeStation don't have that. Thinkorswim has that, but you got to like find it. And there's like a scanner. Like there's all this stuff Thinkorswim has, but it's not very, to me, it's not very user friendly. It's very like technical on Thinkorswim. So like Webull, it seems like it's very user friendly. The platform is very user friendly. You can download the app and it works out great. So I'm very excited to try Webull, probably like next week or the week after that, not sure, but I actually just need to start trading, but on Webull, but I'm excited to try this. So the way that I do it is, don't put all your eggs in one basket. Look into different platforms. Don't trade on two platforms at one time. Know what's working for you and what's working against you. What's working for you is your own technical analysis. Your technical analysis will tell you to get in or out. And this is the last thing I'm going to say about trading in a volatile market. Wait for confirmation. Wait for confirmation. When you wait for confirmation, which is usually the second or third candle after you've done your technical analysis and you put your zones in place and you know exactly where things should shift, you're sitting there waiting. Okay, we've hit that part. Things should go in the direction I think at this point. Wait for confirmation. Don't get in right away. Wait for it. And I think it's usually like, to me, it's like that third. Like if you think it's going to go down, wait for that second or third candle, or wait for the second or third red candle. If you think it's about to go down, if you think it's about to go up, wait for that second or third green candle. And I actually think you should, in this market, you should gear more towards the green, but you gotta, you gotta know that if you are on the wait for the third green candle, that could be the one that shoots up and you can't get in quick enough. So be careful with that. So that's why I'm like second or third. You just have to watch it really closely, because if you get like okay, you say, okay, it's about to go up and it goes red, then you got to wait for that green, and you got to wait for at least one more green. Like that confirmation candle is key. Don't get in unless you get confirmation. Okay. And then know your zones in between. You know, Terry teaches the method, and just know it all. Like make sure you do it in exactly the way that she says it. Don't veer off at all in this season at all. Like don't even try, please. But if you follow the strategy, do exactly what she says, these are great trades. There are a lot of trades you should not get into. Like today I was looking at I know I've been going on for some time. Today I was looking at the SPY because that's what I'm about to trade. Okay, good. My trade is not going in a good direction again. I'm like, what's going on? Yeah. So I was looking at SPY, and I was like, I don't see a lot of I don't see a lot of places to get in right now. I mean, I feel like this is a great time to do a vertical credit spread, because I kind of feel like I know where the zones are, and this would be a great time. So the times to do vertical credit spreads, y'all, is when the market is volatile or when the VIX is high. That's when you should get into a vertical credit spread. When you should do a call, like buy a call or buy a put, is when the market, the volatility of the market is not high. That's the times when you want to usually get into like just to buy a call, buy a put, because the prices work in your favor. When the market is volatile, the prices don't work in your favor on that side, but they do work in your favor on the vertical credit spread side. So that's how you make a decision what type of call or what type of option to get into. Do I want to do a buy a put or buy a call? Well, let's see. Is the market volatile? Yep, it's volatile. This is a great time for a vertical credit spread. So while I do love, my favorite thing is vertical credit spreads, there are just sometimes when vertical credit spreads it's not there. Like I can't find a good vertical credit spread. Like I try to shoot for 0.5 to, actually my favorite vertical credit spread premium is 1.0 period, but that's risky. So like, unless the volatile market is highly volatile. So I shoot for anything above like 0.6 and above. Like if it's a 0.6, okay, that's like the bare minimum that I'll get into a vertical credit spread. So I know this went a lot longer. If you guys have any questions, feel free to reach out. I know you guys have been reaching out to me. Feel free to comment. I see every comment. I'm able to respond to them. If I don't respond to them right away, I will get back with you. I try to respond to all my comments. There's a download, a free download in the bottom here, just for you guys to kind of keep track of your everyday trades, and to know like what to actually track. That's down there too. So check that out. Yeah, if you have any questions, let me know. All right, don't forget to sparkle and trade. Have a good one.